Now in this chapter, I want to talk about the different types of trading because it's important that we clarify, because not everybody wants to trade the same way. First, understand that trading is the act of buying or selling one of these currency pairs. To trade is different than to invest. We're going to compare those in a second. But like I said, there are three main types of day trading. Number one, we have the classic day trader, someone that's looking to get in and out of their trades within the same day. Then we have another type of trader, the swing trader. They might hold their trades for a day. They might hold their trades for 2, 3, maybe 5, maybe 10 days. Some swing traders are weekly swing traders. They're holding their trades for 22 to 42 weeks. That's also considered swing trading. And then of course we have the scalpers, the people that are looking to trade on the shorter time frames, in and out as fast as possible. Where I find my groove is in day trading, and where a lot of people in ASFX find their consistency and find their profitability is in day trading. Now, if you have a full-time job and you're not able to be at the desk for maybe 2 or 3 hours a day because you've got to run out to work, you've got the kids, I totally understand that. As we move through the content, keep in mind that you might fit better then into the swing trader. And if you're a guy that makes quick decisions and you love to be at the desk because you're doing other stuff and you're able to watch charts all day, maybe you consider scalping. All three of these can work depending on the trading system that you use, and I'm going to talk more about the system as we get going here. But just understand, as a day trader, you could swing trade, scalp, and day trade. So there are three different types of trading. Day trading, in and out the same day. Scalping, I'm in and out within a few minutes. And swing trading, I'm holding it for more than a day. So it makes sense. And like I said, trading is not investing. I want you to see them as two different pieces, two different pies, actually, of your entire wealth building portfolio. So with your investments, you're not really looking to sell them in the short term. But with some of these trades, sometimes a swing trade that you thought you were going to hold for a year, sometimes it turns around. For example, for me, I traded SPCE this year, Virgin Galactic. I traded it up from 15 to 60. And then I still held the trade because I thought I was supposed to still hold it because I'm not a stock trader, I'm a Forex trader. I was investing. Then it comes back to 15. When it comes back to 15, it pops back up to 55. Am I, as a trader, knowing what I know, am I really going to let this thing stay there and potentially come back down again? Back to my entry price? No. I ended up getting out of the trade a few months ago at 55, and now it's at 25. I'd feel really stupid if I held it twice from 15 to 50, back to 15, back to 50, and then back to 20, 25. You'd feel so dumb. So taking profits and understanding your time horizons is so important. And make sure that you don't bring the investment bubble into the trading bubble. They're two separate things. If I was investing in SPCE, I would have left it alone for years. But if I'm trading SPCE, I want to make sure I'm taking profits and not giving back gains. No gains are realized until you actually close the trade. Write that down. Now, I mentioned this before, but understand that we can buy these currency pairs or sell them very, very easily. We can also understand that as traders, we are most focused on future price movement, and that could be long to the upside or it could be short to the downside. And as price moves, it can be personified, that's how I like to describe it, into different types of charts, line charts, bar charts. We use candlesticks. I teach with candlesticks. I think that candlesticks give us a very detailed picture of what price action is doing. What are its characteristics? So you've probably seen traders with this before. This is a level 2. And these are all price quotes and how many people are ordering, how many orders there are at that price level, and how timing and all that stuff. Who's doing it? The brokerage's name is right here. You've got NASDAQ, you've got ARCA, you've got BATS somewhere in there. Yep. So these are all the exchanges and where the trading is being done and at what price. I was never trained to read this. It's called a level 2. I was trained to read price action on a chart and react to price action, not forecast it. I'm going to keep saying that. You're going to hear me say it a million times. We react. We don't forecast. So we're going to take that price action data, paint it into a pretty chart, find patterns within this pretty chart, prove that those patterns have been profitable in the past, and then we look to trade them in the future as they present. That's the simplest way you can put it. So I think it's perfect segue here into the next chapter titled, How Do We Make Money Trading Forex?